Good morning and welcome. I'm Pete Najarian. It's hump day. It's Wednesday. This is the take for Market Rebellion, and the dislocation in the markets continues. Yesterday, as a matter of fact, when you look at the markets, you look at the Dow Industrial, and it was very interesting because started off the day, looked okay early on, then it got towards flat, and by the end of the day, we closed down about 60 plus points. Nothing, no big deal there, but you look over at the NASDAQ, you see a little bit of a different story. I talk about a dislocation. How about the NASDAQ going up about 81 points? We're seeing all of these various indices as they're moving to the upside, and we've seen multiple records being set in terms of new highs. NASDAQ seems to make new highs now. It seems like almost every couple of days we see another new high. And the powering aspect of what's really been pushing this continues. As a matter of fact, yesterday, when we were looking at what was really driving things, we talked about some of these Chinese names. So JD definitely stood out. Amazon, Zoom, you get the idea. Microchip, Tesla, Google, Apple, Netflix, Microsoft, all powering the markets to the upside. Now, biotech took a little bit of a breather. Look at the semiconductors, also took a little bit of a breather. Both of them down just a little bit, nothing big. But it was certainly those other names, a lot of tech names that I just mentioned, and certainly some of these new COVID type names as well, moving to the upside. And that's been a trend. The day before, we'd seen some of the same. So pretty interesting. Now, financials, they really didn't look so great yesterday. We talked about how many days can they actually hold onto some of those gains. It sure didn't last very long. And so we had another day where they were under some pressure. Not huge, but down about 0.6%. Industrials also dragging on the markets to some degree. Now, it was names. It was Goldman. It was JP Morgan. It was Citi. It was Bank of America. It's B of A. You look at Chevron. Those are sort of the pulling on the markets. Nothing big, as I mentioned. Not a huge move to the downside, but certainly on the Dow going into negative territory as the NASDAQ's actually going up fairly significantly. Oil still continues to hold right where it was. We talked about gold and this nice spike up towards 2020, actually a little bit closer to the 2000 level, and silver with a nice spike after some selling, nice spike up towards 28. And so that's really where things sort of settle down. You had a volatility index that I've talked about time and time again. It's holding that 21 level. It's barely moving off that 21 level. It seems like the volatility index, you could go away for 3 hours, you come back, it's sort of sitting in the exact same place. That has not been the story for multiple months, obviously, through this pandemic. And as we've watched the volatility index go from the mid 80s all the way down here to these levels of 21, something that nobody probably projected long ago. And a lot of folks probably would never have projected what everybody's talking about now. Hey, we're entering into a new bull market. I mean, it's really extraordinary times. We've taken extraordinary measures. We all know that. So yesterday, the big focus, and coming into this week, the big focus, retail, earnings. That was certainly the focus, and everybody looking at, hey, what's going to happen with Home Depot? How good will it be? Walmart, how good will it be? It was pretty outstanding. Those stocks in the pre-market had a really impressive start to the day, but a lot of that sort of fizzled as we got through the rest of the day. So what are we seeing today? Well, we got more retail, and it started off a bit of a quiet opening, quite honestly. You take a look over at the major indices, you're not seeing a whole lot of movement, relatively flat, really kind of a ho-hum sort of a day. But that's already changed. The Dow's now spiking up about 100 points. As a matter of fact, NASDAQ has been mostly in negative territory, but very, very flat. Nothing huge, just off fairly small. So what's powering this move to the upside when we've got a 100-point move after we were just opening up relatively flat? Well, Nike, throw in those financials. We actually are getting participation from the financials. So maybe they're taking another run at this whole thing. JP Morgan, Goldman Sachs. And then you look over at, obviously, technology just seems to have different names and rotating within those names on a day-by-day basis. But certainly Apple strong. And then you take a look at some of the retail. We talk about names like a Nike. Nike continues to be a very, very strong name. Merck has been a pretty strong performer for quite a while now. A nice move, stair-stepping a little bit higher, not gapping, just making nice moves, it seems like, and building upon some strengths there. So the real focus for today was going to be retail. And we talked about that. We're looking at volatility index, trading the 21s. By the way, yesterday, we traded about a little over 25 million contracts again yesterday. It's become the norm, and it's pretty impressive, the fact that 25 million feels so low when we've had so many days with 30 million. And we've had days, obviously, going way back where we were in the 40 plus million category on multiple days. So when we look at 2020, we know how many odd things have gone on. We know what happened as the pandemic hit and we hit those lows. But the springboard off of those lows has been absolutely extraordinary. And that move to the upside, and it hasn't just been the four names. It's been the housing names. It's been some of the retail names participating. And I realize some of these names were able to be open. And a lot of these names that we were talking about already with the Home Depot and Lowe's and Walmart and Target and a lot of the essentials and giving them an advantage. I get it. I totally understand it. But we can only trade the markets. We don't have that outside control. And certainly you have to look at that and say, okay, under these circumstances, how do they look? Well, Target's numbers, absolutely off the charts and extraordinary. And the same thing can be said for Lowe's. When you see those kind of deliveries from these companies, the comparable sales for Lowe's up 35%. For Target, up 30%. And oh, by the way, one of the things that I said last week on CNBC, they brought me in when an analyst was downgrading Target and gave all these various reasons why the downgrade. And one of the craziest reasons was, well, the stores, they need a little bit freshening up. They just spent $7 billion doing that. They bought Shipt. They've done so many things right, and I'm not defending it. I'm just explaining it because this is a name that I've been in for a very long period of time. I think Brian Cornell had that vision. I'll tell you what, I think the CEO over at Lowe's has that vision as well, Marvin Ellison. So there are visionaries out there who can see things that they've got to do, and it takes that gutsy call. But let's take a look at what really was the inner workings of how did these earnings really come to be what they were, so extraordinary when it comes to Target from what everybody's expectations were. So let me give you just a couple of numbers. The digital sales for Target, up 195%. Now, one of the things that I mentioned last week when I came on and this analyst was talking about all these various things was the stickiness of what occurred in the previous 3 months, the previous quarter. How sticky was that going to be? That's going to be very important. They were selling the essentials. They were selling groceries. They were selling the other essentials, the paper towels, the toilet paper, and all the disinfectants, all those kind of things. They were selling those, but those aren't the high margin areas. So how was that going to be reflected this time? As everything else started to slowly open up, and I realize there's been some closings too, but as things started to open up, would Target be able to retain the folks that have been going there during the pandemic, the highest levels of the pandemic? Well, I think these numbers speak for themselves. Every single category of the 5 categories, each one about 20% of the revenues for Target. So they put them in these categories. How about apparel? Apparel was up double digits. That was down significantly in the previous quarter. Home goods up 30%. Electronics up 70%. Beauty up 20%. Food and essentials up 20%. I think that speaks for itself. And it says a lot about the stickiness, a lot about what was going on for Target. And if you didn't know this, I'll inform you a little bit about this in terms of Walmart. Here's the big differentiator. Walmart, great company, love them. I've actually grown to like them more over time as they've grown into their multiple. But 50+% of what they've got comes in the grocery area. Guys, that's not where the margins are. And I brought that up on television last week as well on CNBC on the halftime. The margins are in the rest of the store. Well, if you take a look at this latest thing from Target, how do those margins look now? How you like me now, Toby Keith would say. When you look at the apparel, you look at home goods, you look at electronics, you look at beauty, and you look at that big bounce back, particularly in apparel, it really does stand out. Absolutely an extraordinary quarter and amazing. And I think that might be the backbone, even though Target is not part of it, that might be the backbone of what we are seeing happen in terms of the movement in some of these indices right now. And certainly a really big, powerful move. Now, this is the point where we usually love to give you some unusual option activity. So here's what I got for you today. So it's Freeport-McMoRan. That's FCX. Now, this is one of those names that's hit on multiple occasions. It's hit a lot. As a matter of fact, just in the last couple of sessions, we've had this hit 3 separate times, all being very bullish. As a matter of fact, you go back to July 6th, and you'll see that there was some buying of the November 14 calls. Pretty significant amount, bought for about $1.25. Today, they're selling those calls, and they're taking about $2 off. So a nice big winner in a very short period of time, taking that money off the table. But that's not the end of it. And now they're rolling those calls. And these are the trades that we love most here with Market Rebellion. When somebody's got a winner but they still want to be there, but they have the discipline to take the winter off, put some of that money in their pocket, and then put out a little bit money for another opportunity for the upside. So those November 14 calls, they've been sold. Now, what did they do? Bought 10,000 of the November 16 calls. Now the stock is trading 14 3/4, and they're paying $1, a little over $1, but call it $1 for those calls, with stock trading 14.75. These are the trades that we like to see, because oftentimes when you see those kind of trades, it's somebody who has the discipline to take some profits and put it in their pocket, and also still convinced that there's going to be upside even from these levels. Even though the stock has started to move to the upside already, they still think that there's more to come. So that's something that really sticks out for us. That's kind of the dissection of what we're looking at. Now, how do you understand that even in better? You get educated. You have our guys, our mentors, our coaches help you out to have a better understanding of the option markets, of these derivative markets. I talked about 25 million, kind of feels like a ho-hum kind of a day yesterday. 25 million contracts a year ago would have been a monster day, a monster day. And a year ago, we were averaging on a daily basis, call it very close to 19 or 20 million contracts per day. And that was huge. Those were huge numbers. And now we're talking about 25 million feeling like a ho-hum day. Well, it did. Felt like a ho-hum day. Today's starting out pretty good. We already have multiple different huge hits already hitting on the unusual options activity site that we've got at Market Rebellion. We've got some great educators. They can give you an understanding. I got so many people daily who reach out to me and say, hey, Pete, how do I understand these derivative markets better? I really like what you guys do. And I always say, hey, get educated. Don't just jump in there. You might get lucky early, and then all of a sudden you think you know more than you do. You got to get educated. You want to have that background. It'll give you better opportunities for success, and they'll also talk a lot about discipline, which we bring up each and every day. Folks, have a great day of trading. It's going to be an exciting day, and I'll tell you what, sun's coming up here in Minnesota. Could be a great boating day as well. You ever look at these boating stocks? Mastercraft and Malibu. I had some guy asking me on social media just the other day. He said, hey, Pete, what kind of boat is that? You look like you're a little bit too close to the back end. I'll tell you what, these wakeboard boats, these wake surf boats, the way they're designed, the inboard engines, and the ability to have these ballasts that fill up with water and pull down the back end of the boat, and they've got the surf gates that come out and they create this huge wake that you can ride upon. It's unbelievable. It's such an exciting thing. And with social distancing, take a look at how these stocks are trading. Take a look at Malibu. Take a look at Mastercraft. Oh, and by the way, Polaris, which is just down the street here, Polaris here in Minnesota, they might have made a pretty nice acquisition of a big boating company themselves. And that's really been something that's really been beneficial to them in these times. And it'll be beneficial in the future with or without COVID, because I think this is a new trend and it's an unbelievable thing, and a beautiful day in August with the sun shining. Why not? Folks, have a great day of trading.